So hi everybody and welcome to the latest instalment of Fully Covered. Today marks the inaugural video episode, so I ask for you to be patient as I navigate through it, nerves and all. Today's focus is on the impact of the individual accountability framework on directors and officers insurance. And to talk me through this very complex issue, we're fortunate to have Stephen Dardis from Arthur Cox joining us, offering his invaluable expertise and insights. So Stephen is of counsel with Arthur Cox Insurance Group. He has significant experience in the areas of insurance, reinsurance, financial regulation and mergers and acquisitions for insurance undertakings. Prior to joining Arthur Cox, Stephen gained significant experience in the insurance sector as a senior in-house counsel advising a large US-based multinational life and non-life insurer in respect of its European and EMEA business, advising on M&A transactions, portfolio transfers, reinsurance treaties, Solvency II, and lots of other regulatory matters, ESG issues, risk management, outsourcing, and corporate governance. So, Stephen, thank you so much for joining me today. And thanks for being my first guest on a video episode. So thanks again for your time. And to kick things off, really, I'd like to maybe start by you explaining what the individual accountability framework is.
First of all, thank you for having me, Emma. So happy to be here. The Individual Accountability Framework is a framework proposed by the Central Bank of Ireland to really drive positive behaviours and culture within regulated firms while strengthening the CBI's enforcement powers, particularly in respect of individuals. There's a few kind of key aspects to the regime. The first, I think, is the common conduct standards, which apply to all CF or controlled function role holders. It's similar in many ways to the existing fitness and probity standards, which I'm sure most of your listeners will be very familiar with, and other existing legal duties, such as, individuals have to act with honesty and integrity. They have to act with due skill, care and diligence. They have to act in the best customer interests or of their customers, etc. On top of that, the kind of next layer up is the additional conduct standards. So those apply to pre-approved controlled function holders and CF1s. So really senior individuals with management and supervisory responsibilities. The focus for those, the additional conduct standards, is really on proper oversight and conduct of the business, and also prompt disclosure of any issues to the Central Bank of Ireland. Then another layer again on top of that is the senior executive accountability regime, and that applies to just PCFs, just pre-approval controlled functions in certain regulated firms. So really banks and insurers in the first wave. There's also some enhancements to the fitness and probity regime, including annual certification of all PCF and CF role holders. And really, I think that the key aspect of the regime is the duty of responsibility on PCF and CF role holders. So it requires them to take any steps that are reasonable in the circumstances for such a person to take in making sure that the conduct standards are met, or that the affairs of the firm for which the individual is responsible are, conducted in accordance with financial services legislation. I think one of the questions that comes up a lot, and actually, within the legal profession took some time for everybody to get their head around, was what essentially is the difference between the F&P regime as it stands and the IAF. And really, I think, as the central bank explained it, that the fitness and probity regime is there as the gatekeeper. That's always been its function. So before somebody takes up a controlled function role in a regulated firm, whereas then the IAF is there to actually make sure that, or to ensure that people are adequately supervised, and it's about what you're doing when you're in the role. So,
very good. Yeah, no, that's a really, really good overview of what the framework is. What are the timelines for implementation?
So I think the IAF is already in force. So the Individual Accountability Framework came into effect on the 29th of December 2023. I think the next major milestone is the 1st July 2024, where the Senior Executive Accountability Regime will come into effect for those firms that are in the first wave for it, which is really credit institutions, some MiFID firms, and insurance undertakings. Importantly for your listeners, that's just insurance undertakings. Captives are outside of scope for the moment, as are reinsurance undertakings and SPVs. And then there's an important carve out, of course, that actually came up late in the kind of proposed consultation and implementation and was announced at the Financial Services Conference, I think, of the CBI last year, where they said that the non-executive director community would be outside of the scope for another year. So that will only come into effect for NEDs and INEDs from the 1st of July 2025 for those in-scope firms.
Okay, and the companies or the entities that you mentioned there that are outside of scope for at the moment, so captives and reinsurers, etc., do you expect them to be brought into scope, and what kind of timelines would you expect?
Yeah, I think the indication is that other regulated firms of all kinds, but including reinsurers, SPVs, etc., will be brought within scope over time. However, there's no clear timeline. I think the CBI is going to deal with this, as they say, in waves. So once it's embedded and implemented and they've probably gone through whatever teething issues may arise for the first wave, they'll start to look at further waves.
Okay. So it's clear that there will be more responsibility placed on individuals within organisations on the back of this. What are the consequences of not meeting those responsibilities, or what do you think the sanctions may be if something does go wrong?
Yeah, well, if something does go wrong, I mean, that is the CBI will then have the full kind of administrative sanctions procedure toolkit at its disposal. There'd obviously be the potential for an investigation that would be launched. And then, I mean, the sanctions are those that are currently there. There could be, prohibition orders preventing somebody from actually continuing in that role or in any role within the regulated sector. And obviously headlines of fines of up to €1 million for an individual.
We saw in the UK as well, it was April 2023 when they actually imposed the first financial penalty for an individual who failed to comply with the rules in the UK. Now the fine was about £81,000, and it was where a CIO actually was found to have breached a conduct rule because they failed to take reasonable steps to ensure that company managed an IT outsourcing arrangement. So it was just interesting to see, what's coming from the UK in terms of those sanctions. But that was the first one, and I'm sure there will be many more. But just in terms of the focus of today's podcast, which is on the impact of on directors and officers insurance, I suppose the global risks relation to directors and officers insurance continue to gather pace. Insurers have to evolve in a very kind of fast moving claims environment. There's a lot of things on their minds: cyber, ESG, greenwashing, regulatory developments. I suppose they're all key areas of focus, and there is a lot of risk contained within those particular items. So D&O Insurance is a really important part of mitigating those risks. So if you could just maybe explain to the listeners what D&O Insurance is.
Yeah, and I think I'm happy to do so, but I think what I'd start with is saying is what it's not, and it's often not a panacea. It doesn't cover everybody for everything, and I think people are starting to realize that, and we've certainly seen that in kind of the inquiries we're receiving, is that now there's an increasing focus on what your D&O insurance does cover and what it doesn't cover. And I suppose the main thing is that it covers, and this is the side A cover, and that is for non-indemnifiable loss, where the company, because of legal prohibitions in the Companies Act, cannot indemnify a director or officer for potential breaches of trust, breaches of duty, negligence, whatever it might be, unless they have been, found by a court they've essentially been acquitted by a court of whatever wrongdoing they've been accused of. And so obviously that creates a timing issue, because if there's a claim against a director or an officer or an investigation, they may not be able to seek indemnity from the company until the very end of the process, when hopefully they have been exonerated. So that's where, D&O cover in Ireland really fills that gap in the market, that once a claim comes in, the director can go directly to the insurer and say, I am now subject of a claim or an investigation. I need to engage outside counsel to help me defend this claim. I need the defence costs covered, because obviously, as we know, if litigation or investigation drags on, those costs can be significant. So that's really the main kind of limb of any D&O policy. There are others, but that's usually the most significant from the perspective of a board member or whoever who is looking for cover at that time.
Okay. And have you been receiving a lot of queries from companies on the back of the individual accountability framework?
Yeah, I think there is a renewed focus on this because now, of course, the devil is in the detail, as with most of these things. So the question is, well, okay, so I might be covered for defence costs in that scenario, but what if the investigation drags on? Can the insurer is there a sub-limit or something under the policy that might say that my defence costs are capped out at a certain point? What if there's an appeal? What if actually ultimately I am, found guilty of whatever wrongdoing I'm accused of, and then a fine or a penalty is imposed? Is that covered as well? And that will vary from policy to policy. And I think that's going to be one of the kind of more complex issues for insurers to deal with, particularly, in some policies, they will expressly exclude civil fines or penalties. In others, they'll say they're covered, but to the extent insurable at law. And that's actually still an open question, is what level of culpability or how kind of bad your wrongdoing has to be before at law an insurer could say, well, actually that is outside the scope of cover and we're not, paying out on that aspect of the claim.
So how are insurers getting to grips with that?
Well, I think that's it's probably still to be seen because it is, as I said, an open legal point. Both here in the UK, where obviously they've had the SMCR for longer, there isn't apparently much case law on this, and it's the same in Ireland. And I think insurers will be themselves looking at the wording in their D&O policies a little bit like, suddenly there was this focus on the wording in business interruption policies after the COVID pandemic. But I think now at least there's the opportunity to get ahead of the game and to look at, well, so who is an insured person here? Do they have cover for civil fines and penalties? If so, is there a carve out for, to the extent insurable at law, which may or may not really be strictly required, but also then to assess, well, actually, how far would we go? What is the point at which we would be saying, no, that is now, kind of fraud obviously is not going to be covered. Negligence might be. What degree of recklessness or something like that in the middle ground would actually be the point at which an insurer says, no, that's no longer covered and we're not going to give the pay out on that aspect of the claim. So I think it's an opportunity for the insurers to think more about that so they know where the lines are drawn, even internally.
Very good. So you mentioned there's probably a lot to unpack there, but one thing that is there's a lot of, I suppose, talk about in relation in the D&O market at the moment are the limits within D&O policies. So what would a standard limit be? And I suppose a limit of maybe 500 grand 15 years ago, would go so far, but now maybe 500 grand, mightn't help you that much if I suppose the investigations are prolonged. So what type of limits are standard and what would you expect to see, I suppose, going forward on the back of this?
Well, yeah, I think you will definitely see a focus on the overall limit because particularly if the population of insured persons expands, if it's not just, say, PCFs and CF1s, those managerial or supervisory responsibility roles, if it also starts to, if regulated firms start to look for cover and insurers are willing to provide cover for the CFs, there's a question about whether that overall limit on liability is going to be sufficient. It might have been 5 million previously if you're a large regulated firm, but if you've got a greater number of individuals covered, obviously the risk expands. There is now a question as to whether the new regime will lead to greater enforcement actions. The CBI says that it won't, but and for well-governed firms, there shouldn't be anything to worry about. But there is a question there, if there's a large population of insured persons, do you need to have a higher limit? Will there need to be sub-limits on defence costs? Will you need to perhaps have, as you see sometimes, special excess limits for particular individuals such as non-executive directors who may say, well, when you're looking for them to take up a role, they may have concerns that they are entering in somewhat blind as to how well run the organisation is. And they'd say, well, will need additional top-up cover at least in relation to any claims that I make, particularly if there are sub-limits on the policy that might otherwise limit defence costs or fines or penalties as well. So I think there will definitely need to be a holistic look at the impact of the IAF and SEAR on D&O cover across all regulated businesses. And I think particularly insurers find themselves in a kind of a unique position here, because not only are they within scope of the IAF and SEAR themselves, but they're the ones potentially providing cover to other regulated firms. So they kind of need to look both within and without in some cases.
So just in terms of the role of the broker in this, because that's an integral part of the process, have you heard, I suppose, much from the broking community in relation to this and the queries that they're receiving and how they're handling those queries?
I suppose at this point, because it still is in a way early days, I suppose, since the recent implementation of the IAF and SEAR still coming, we've only heard indirectly. Have heard that there is limited appetite in the market to provide D&O cover to the sort of lower ranking controlled function role holders, so CF2s to CF11s, those not in managerial or supervisory responsibility roles. So I think there is definitely in some of the brokers who are providing or arranging D&O cover for larger financial institutions, there's definitely a level of knowledge and expertise here that is required in order to advise those firms. For smaller businesses that are not within SEAR at the moment, but nevertheless would be within the scope of the IAF overall, I think there's probably still an education piece in terms of getting to grips with this and to what extent cover may in fact be required. And obviously, for a lot of businesses, it's about peace of mind for employees, particularly if it's a relatively small business and you have someone in a CF role who's, say, involved in claims handling or something like that. And they want to know that they're not going to be hit with up to potentially €1 million fine because of, some perceived wrongdoing or failure to adhere to the conduct standards. So obviously that's a doomsday scenario and hopefully very unlikely to happen, but nevertheless, it's something that might need to be addressed even in an employee relations perspective. So
yeah, absolutely. I think that's the important an important message is that we need to be covering all eventualities, and we just don't know what the worst case scenario could be, but it's really important to understand what it might be and just making sure you have sufficient coverage.
Yeah, and for some of the larger organizations, they may be able to look at alternative ways of providing comfort, either indemnity agreements or side letters or something like that to, say, CF role holders who they can't get D&O cover for. But obviously that, if for a smaller enterprise, may not be so much comfort to the employee, it may not be feasible for the organization. So it is definitely going to be more difficult, I think, for the smaller business here.
So what advice would you give to organizations and their directors and officers to better understand, I suppose, and manage the implication of the IAF on their insurance coverage?
Yeah, well, I suppose the senior individuals within the organizations, they'll need to start to look at the responsibility maps, the statements of responsibility for their own roles. I think there will be questions at a very senior level as to where the prescribed responsibilities will sit. And those are the responsibilities under the senior executive accountability regime that are not inherent to the role, but they need to be allocated somewhere to an individual within the firm, and they shouldn't all roll up to the CEO as the sort of default position. And people, I think, are thinking about that now. Probably a lot of well-run organizations are well down that road at this stage, with SEAR coming in on the 1st of July. But equally, the time moves on and the world changes. So individuals who are there now may leave or retire. The business can evolve and roles can change as a result. So even if you've got your prescribed responsibilities in the right place now, that may not be written in stone forevermore. So people will need to keep that in mind and keep that kind of evolution evolving, or keep that evolution sort of in mind when they're making sure, maybe on an annual compliance or risk management cycle, that it's still with the right person and in the right role.
Okay, very good.
And then I think as well that there's kind of it's the individual, or the interests of the individuals as well, may start to diverge earlier in the process, given that we are now talking about individual accountability for senior people, and that can potentially result in a tension between the interests of the organization, the interests of the individual, and that could even have an impact from an underwriting perspective, because it could double up on defense costs. If somebody says that they want to retain separate counsel from the undertaking, that could, obviously have an implication in terms of the cost of cover for an insurer.
Okay, very good. So if maybe we can look at the key issues for D&O insurance cover. So if we maybe go into these in a little bit more granular detail, and you've mentioned some of them already, the definitions and limits and things like that, but maybe if you could talk us through them in a little bit more detail, that would be great.
Yeah, so I suppose, look, as we've said, I think one of the key ones is going to be the definition of insured persons, the population. Whether that, in particular, I think we can almost assume that PCF role holders and CF1s will be covered based on existing wording in policies. Then it's going to be the CF2s to CF11s. We've talked about that already. The overall limit of liability, again, is going to be a key one. I think, then you're really into the nitty gritty of some of the wording in there. The claims, whether that definition covers regulatory proceedings and investigations. Losses, does this cover civil fines and penalties, as we've talked about? Exclusions, are there any, does actually, anything like civil fines and penalties actually excluded actively from cover?
And would they have been excluded in the past?
Generally not. There's often an exclusion for, say, deliberate misconduct, fraud, criminal fines or penalties, which would be uninsurable at law in any case. And then things where, a director or an officer has kind of improperly gained an advantage, so diverted a corporate responsibility or corporate opportunity or funds into their own hands, then obviously cover would not be provided. So there's some fairly typical exclusions that you'd expect to see, but obviously, every policy can vary and does need to be checked, particularly when there is something new like the IAF that comes along. I think, again, defence costs, and I think we might have touched on this, it's not just the defence costs for a claim, it's whether it's the defence costs for an investigation, it's the extent to which there might be some sort of sublimit on the policy that where because always the insurer's prior written consent will be needed before defence costs can be incurred. But is there something more? And at what point does the insurer potentially have a right to say, well, actually, no, we should just admit wrongdoing here and settle? Does that have to go to senior counsel potentially as a dispute resolution mechanism between the policyholder and the insurer? And then things like the cost of an appeal. How far do they, can a policyholder go in an attempt to clear their good name? And then I think, another one obviously is going to be the runoff period, because most D&O cover is written on a claims made basis almost invariably. And so for former retired individuals, they will want to know that there's an, extended reporting period, often, indefinite or for 6 years or something, so that if there is a CBI investigation of their fitness and probity or their conduct up to 6 years after they've left the role, that they can still claim under the policy that was in place when they were in their office. And then I think finally at one, and often this will be kind of, dear to the heart of a lot of insurers or individuals in insurers in Ireland, where you're part of a broader international group and you're looking at a group policy rather than a standalone Irish policy, say, is to make sure that that actually has what you think it would have: Side A cover for non-indemnifiable loss. Is the overall limit appropriate? Is there going to be any issue with you actually, bringing a claim individually under that policy? Is it written on a composite basis, etc.? And then often another one that you sometimes do see in group policies is making sure that the insurer is actually authorised to write business in Ireland as well. So just, a number of things that may need to be checked. And that can be difficult because often in a large group, they may not be willing to share a copy of the policy or substantial details with individuals on boards in particular jurisdictions. There's a number of different things to be thought about there.
I think that's probably an interesting point for insurance companies in Ireland as well, because a number of them are part of larger groups. So I think that's a really, really important point to make as well. Yeah,
and it is definitely something that is a focus under the IAF and SEAR, because you can see a situation a little bit, to use that claim that you mentioned, or the fine and sanction under the SMCR in the UK as a good example, where, say, a CIO in a large insurer in Ireland, but as part of a multinational group, says that they want, an upgrade to particular systems to deal with an IT risk. but it goes to the group and it says, actually, that's a group service, or we don't have the budget or something like that. Has that individual then taken reasonable steps? Even though group has said no, have they discharged their duties under the IAF and SEAR? And that is going to be a tricky one. I think that the view seems to be that probably asking for it, raising the issue, even if the answer may be no, that will have been enough to, kind of say that you've taken reasonable steps in those circumstances. But really, like a lot of these things, we'll know more when the first investigation or enforcement action actually starts to land.
Okay, thanks so much for that, Stephen. So I suppose we've come to the end of the podcast today. So I'd really like to thank you for your time. I think it's been a really interesting conversation for the listeners to understand more about what the IAF framework is, the timelines, the possible sanctions, the increased responsibilities on individuals. Then I suppose we looked at D&O Insurance, what that is, and the complexity and the need to really understand what is in that policy, and for companies to review them in detail in light of everything we've said today and all the intricacies which will be really important on the back of IAF and SEAR. So I'd really like to thank you for your time today, and I definitely advise the listeners, if they've any queries or in relation to this, to please contact you and your team and Arthur Cox for expert advice and support. So thanks so much.
Well, thank you very much. Thank you for having me.